Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look in on the Forex market. So in new weekly report, we have considered the recent statistics and the steps that have followed from the European Central Bank, steps that are expected from the Fed Reserve, how they react on the current situation, and what the consequences could appear as a result of their activity. So unfortunately, the results of this analysis suggest that inflation will keep going higher as in the United States and as in Europe, because as European Central Bank and Fed Reserve now are capitulating and switching on the money printing machine again. So the European Central Bank publicly announced the new quantitative easing, although it calls differently. So while Fed is just playing the spy games, and although it has announced the quantitative tightening, but it absolutely doesn't fulfill their obligations on the contracting of its balance in providing more and more liquidity to the markets. That just tells you that inflation will not go down. At the same time, we expect big events in the period of the 27th and 28th of July. I already talked about this briefly last week, but just to repeat and remind you, we get the joint earnings report from the Google and the Microsoft, and rumors stand that probably they will be worse than expected. Also, we expect that United States economy officially steps in a recession, although market expects positive gross domestic product for the second quarter. We do not see reasons for that and suggest that numbers will be negative. Since this will be a second quarter in a row with the negative gross domestic product numbers, it will be officially starting of the recession, and be prepared for the massive screams in the media on the recession and panic that starts to appear on the market. That in turn should trigger a downside reversal as on the Bitcoin market, as on the stock market. Finally, the Fed decision with the whole percent rate hike probably will happen, and we agree that this is mostly already priced in, but we agree only on the short-term performance. Indeed, market participants should start selling and closing position on the fact, while they were opening position on the rumors, on expectation, but that will be only short-term reaction. In the longer-term markets, across the board will have to absorb 2.5, 2.75 interest rate, which is, well, actually is really heavy burden for all markets. And while the first reaction might be opposite to decision, within the few sessions after that, the existed trends probably will continue, and that makes us to keep our target of the 90, even below the parity for the euro currency valid. This is our medium-term target. In the shorter term, what we could get, based on the technical analysis on the daily intraday charts, it suggested that market still could try to make another upward action here. It's just because it's definitely, we see no desire of the market, no intention to show downward continuation. It stands stubbornly in route of resistance, and recent performance on Friday, how market deals with the attempt to go lower, makes us think that it's more probable now to move up to the 103.60, 103.70 area, which will be major resistance on the daily charts, accompanied with the daily overbought. So another spike up might happen here. That's why currently we are not considering taking new short position. If you have taken it, well, you could make the decision and you have the break-even stop, because it was possible to play stops to break even recently with this drop on Friday. you just could keep them, because we could be wrong, maybe some information might be released or something of that sort. But on the technical analysis now, it seems that still market should make an attempt to keep going higher. So with the break-even stops, you could hold the position, but it makes sense to not take any new short position by far. Because on the 4-hour time frame chart, take a look, market takes the more and more shape of the flag. After the upward action, this is bullish continuation pattern, suggests that might be another upward continuation. But this is not the major reason, and if you take a look at the hourly chart, the major reason stands right there. So take a look that in fact the minimum target of the engulfing pattern that had been formed recently now is completed. So market just completed the ABCD, and that is minimum target of this engulfing pattern. Normally, if market indeed intends to go lower, especially on this momentum, on this solid drop down, it would go lower. But take a look, market reversed up despite the strong momentum, and immediately right after the ABCD pattern has been completed. So this is more the bullish signs appeared on the market. Correspondingly, here might be some kind of, I don't know, minor hand and shoulders to be formed where market could start upward action. So we're not calling to trade it long, although it's not forbidden. So if you would like to trade it long, you could watching for patterns, as I said, for instance, for this minor hand and shoulders, or you could deal and use directly the flag pattern here, try and take position as close to the lower border as possible, with the keeping stops somewhere below the lower border of the flag. Because if flag will fail, market start dropping, it means that the bullish setup, bullish context is failed. So while flag is valid and market is calling inside of it, it means that the bullish chances exist. So that's choices up to you, what particular pattern you would like to use, either this hand and shoulders, or maybe some other patterns will be formed on Monday, or using the flag consolidation. And in general, it's your decision whether you would like to take the long position here or not. But currently we're just suggest that it would be better to not consider taking the new short position on the background of these bullish signs that we've got on Friday, and in general with this stubborn standing right below the resistance area. As long as the market stands below it, as more bullish the performance becomes. Fine. On another moment, guys, here is just maybe take a look. Maybe grabber will be formed there as well on Monday. So maybe you could use the grabber pattern as well for position taking, on the long side. So that's approximately what we expect on euro currency next week. And as I said, it will be really thrilling days on the 27th and 28th of July.